Hello, everyone. Can you guys hear me clearly? Okay, perfect. Okay. Now, Audit and Assurance F8, right? This is obviously if you've studied F7, you've studied the prerequisite for F7, which is F3, right? If you've studied, let's say, F9, you've probably have the idea of what exactly management or managerial accounting is when it comes to F9 or F5, because you've already studied F2, right? When it comes to F8, a lot of students tend to because obviously it's something that you haven't studied before, right? So a lot of students get confused about what exactly audit is, and why we do it, and what's the use. Is it a cost? If we do a cost versus benefit analysis, does it make any sense? Are there numerous benefits, that is, whether the benefits over the cost or not? So all these questions arise when you obviously, at this stage, when you have a very little idea of what exactly audit is, right? I always tell my students one thing: audit itself, it's just an activity, right, that we perform. All right. And we do it in a normal, ordinary course of life as well. For example, let's say I want to buy a car, right? I want to buy let's say, a sedan. Okay. And I have three options. All right. I want to buy a sedan, and I have three options. I have Honda, I have Toyota, right? And let's say I have a Suzuki, right? I have three options to buy, and I want to buy one car, right? I have three brands, and within these brands, we have multiple options within the sedan category, right? And I want to buy the latest model, for example. Okay. Do you? And I'm not a car expert, by the way. Okay. So let's say, in order to ensure what the to get the best car within the budget I have, what do? I hire someone, right? I hire someone who is a car expert, who is an expert in this field, who is an expert in the automobile sector, for example, right? That person knows what car should be bought with, let's say, the budget I have, the taste I have, the comfort I want, the use I have. There's a possibility that I might use it within a city which is highly populated, right? Or I might use this car to travel, intercity. Okay. There's a possibility, right? So the point is, obviously, that expert knows the right questions to ask in order to get me the best car. You understand? So he'll ask me about my budget first. He'll ask me about the use second. He'll ask me about the duration or the time for which I use a car. For example, 5 years, 6 years, 10 years, 15 years. It depends, right? So he'll ask me all the right questions, and based on the answers I give, he'll choose one car for me. Correct? What skills he's using at that time to for the answers, for the claims that I've made, for the answers that I've given to his questions? The skill that an auditor requires. All right. He's performing an activity of audit, and he's auditing my taste, my pockets, my finances, and trying to get me the best result. Okay. Obviously, we don't use this activity in the context that I've told you over here. When it comes to F8, obviously it's an entirely different concept, but the activity itself is something that we perform in our ordinary course of life, right? When you're buying a new shirt, when you're buying a new jean, when you're buying a new bag, when you're, let's say, you want to decide which school or which college to go for your F8 studies, for example, or when you're deciding about, let's say, which a new phone to buy. Each and everything requires a certain aspect of this activity, which is called audit. All right, you guys understand this basic very this is a very vague concept of audit itself. All right, when it comes to audit and assurance, F8, right? Over here, what we're auditing is the company, right? We're the financial experts. We're the experts who know the auditing standards. We're just pretending right now because obviously we haven't studied the auditing standards right now, right? We're the experts who know the financial reporting standards, right? We know all of this, all right? The point is, based on the knowledge that we have, we perform an activity which is called audit, right? On the on a certain subject matter, on a certain subject matter, which helps the user of financial statements to place his reliance on that subject matter, right? So there's a subject matter, for example, the financial statements, right? The financial statements being prepared by the management, and we all know this because we've studied F2, F3, F7, we've studied all these papers, right? So management is responsible for making the financial statements, for producing the financial statements, right? And these financial statements are produced for whom? For the shareholders, for the users of financial statements, right? And users are the shareholders, right? The members of the company, as we call it, all right? And now these shareholders basically, they know that even though they have appointed these managers who are running the show, right? Even though they have appointed, they're the ones, right? They vote in an AGM. You've studied this in F1, that they bring in their vote in an AGM and they choose the directors. The directors ultimately appoint the managers, and the managers are the one, and the directors and managers together run the company, right? So the point is, they are the ones who chose the managers, but they don't place reliance on the matter that has been produced by their own managers. Why? Because they know that they have an element of bias. They might, show something which is not as good as it looks or as it has been shown, right? So the point is, for example, and this is a very practical example I'm giving you, right? For example, the revenue of the company, the reported revenue for the current year should have been, and you've studied this in F3 when you were studying, for example, a topic called trial balance and errors, right? You know that there are certain errors which need to be accounted for, and there are certain errors which give us a difference between the debits and the credits of the or within a trial balance, and we create a suspense account, right? But there are some errors, for example, errors of omission, error of commission, principal, right? All these errors are the errors that will give you debit equals credit, right? They will always give you debit equals credit. But error of classification, for example, you know that you've classified in the wrong account, right? Error of original entry, you've heard all these errors, right? So for example, the revenue that should have been reported is, let's say, 50,000, whereas the revenue actually reported, so this is to be reported and this is actually reported. All right, like I said, who is producing these figures? You guys can unmute yourselves and tell me. There's not an issue. Who is producing these figures?
Managers, accountants,
The management, correct? And for whom are they producing it? For the shareholders, correct? The shareholders know that these people are human. Number one, they have a tendency to make mistakes, right? Number two, they have a huge tendency to report biased figures, so that their compensation, because management is hungry for compensation, right? Any employee, what do they want? They want compensation, bonus, salaries, commissions, right? That's what they want. Especially, for example, if you talk about salespeople, right? They all they rely on is the commission. Salary is very basic, right? They rely on the commissions, and commissions depend on the sales. Directly, they depend on the sales, right? So the point is, there is a huge possibility of these figures being window dressed, of these figures being extrapolated, of these figures being overestimated, right? In that case, the owners, the ones who are taking the risk, the ones who have invested in this business, need someone need someone who is independent of the company and independent of any activity that goes in the company, independent of any sales, independent of any expenses, independent of any assets, everything, independent of any relation with the directors, with the ones who are running the show, independent as a whole, right? Which we call de facto. All right. So this is where people like us, auditors, come in, and we use our knowledge to verify these figures, to verify these claims, to verify. Non-executive is a different thing, right? You're right that there are certain cases, and in fact what you studied if you're in your F1 as well, is that non-executives are and should be independent, right? But practically, you know what happens? These non-executives have cross directorships. You know what cross directorships are? So for example, they are non-executive on, on the board of company A, and they're an executive on another company, which is, let's say, company B. And similarly, there will be another person who will have a cross directorship, vice versa. Company B non-executive, company A executive. All right. So there's a possibility that your decision gets influenced. Auditor is someone who is 100% independent and has to be 100% independent. Okay. So the point is, we as an expert, financial and auditing expert, right? Because there are certain auditing standards which I'll tell you. So we as experts, what we do is we verify their figures. Whose figures? The management's figures, the figures that the management is producing for the shareholders, right? And then ultimately we issue a report saying that these figures present a true and fair view. If not, these figures do not present a true and fair view. Truth and fairness is part of your conceptual framework, guys. All right. Truth and fairness is part of your conceptual framework. All right. So the point is that ultimately, what I mean to say is, truth and fairness is the base, it's the crux of reporting. All right. If your report is not true, it does not reflect the true picture, or it's unfair, it's biased, for example, there's no use of producing such a report, right? So the point is that ultimately we as auditors jump in and um all right, I'll come to your question in a bit, Ahmed. I'll come to your question in a bit. All right. So the point is that we as auditors, as independent auditors, we jump in and we take this charge of verifying, not producing. I didn't say produce the figures. I didn't say reproduce the figures. I didn't say interrogate the figures. I never said that. I just said verify. There's a very fine line between verification and interrogation. All right. And that line is very thick. There's a very, it's a huge border between these two things. All right. Verification, interrogation, these two are different things. All right. We're not the CIA, or we're not the, uh, you know, any, intelligence agencies over here. We're not interrogating anyone. Right. We're just auditors, independent auditors, right? And we verify these figures. If these figures do not reflect a true and fair view, we report it to the shareholders in our audit report. All right. If the figures are true and fair, we obviously tell that as well to the shareholders. So ultimately, shareholders use us, they pay us just to rely on these figures. And I already told you why. Because they don't trust the management as a whole. Okay. They know that the management, there's a huge chance of human error. Secondly, there's a huge chance of the management being bias. All right. Now, Ahmed, as for your question that the auditors are legally liable, yes, the auditors are. That's what you asked, right? Legally liable for the audit. Okay. It depends on the law, right? The ambit of the law. For example, let me give you an example, right? Audits being done in, for example, UK. There are some ICAEW regulations, right? ICAEW is the board, or I would say is the organization that manages the audit in UK. ACCA, again, depends whether the firm is an ICAEW registered firm or an ACCA registered firm, right? In India, it's ICAI, right? Institute of Chartered Accountants of India, right? In Pakistan, it's ICAP, right? So these are the regulators. They regulate this profession, all right? And if there's something that needs to be done according to their bylaws, especially in case of documentation, and you've not done it, right, they can take you to the court. Obviously, that's the worst case scenario, but yes, to some extent, you are legally liable for the audit. If, for example, you've probably heard about various cases in African region, right? You've probably heard about various cases in the South American region, right? These are the regions which are highly manipulative when it comes to doing business, right? African regions and South American regions, right? These regions, if you want to do business over there, obviously, first of all, most of you need to be corrupt. Simple, right? And you need to spread corruption. Okay, this is the general phenomena over there, and this is the general, I would say, persona over there of doing business. If you're not corrupt, you cannot do business in South America or uh, you know the African regions, right? Most of them. Okay, that's that's information that I get from my students and from my peers and from some of my family members as well, who are basically employed over there. All right. So the point is that these are specifically the regions that are, and this is what they try to do. They try to, induce corruption in this profession as well. And that is why there have been instances where EY, PwC, Deloitte, right? They have been, and KPMG as well, Big Four, especially because these are the companies, they have majority of the business in the audit profession. They have been penalized, like huge penalties have been imposed on such firms just for their malpractice during audit, all right, by the regulators, by the court. Okay. Why? Because obviously, for example, they were caught lowballing, for example, or you can say, in another malpractice, for example, settling out of the settling for a certain transaction, right? Overseeing such, or overlooking something that shouldn't have been done in that way. For example, if you've heard about the Arthur and Anderson case, have you guys heard about the Enron and Arthur and Anderson case? Everyone has heard about it, right? What happened to Arthur and Anderson? Do you guys know? In the Enron case, how was Arthur and Anderson involved? They knew Enron was corrupt. The partners I'm talking about, right? They knew. Probably the managers also knew that the company was corrupt. All right. They were, they had bogus sales. They knew about it. And when the regulator came in, because the firms get audited by the regulators, all right? The firms, PwC, KPMG, Deloitte, BDO, all these firms get audited by the respective regulators based on the jurisdiction, right? So what happens is, or what happened at that time was, when the regulators came in, they found shredded evidence on Enron. That was the downfall of Arthur and Anderson. All right, the partners were jailed. I guess one of them died in one of the during his sentence. So one of them is still alive. They've probably started their operations again because they've served their sentence and they're out now. Okay, so Arthur and Anderson, that's what I read in one of the newspapers, that they've started their business again. They're trying to expand. So at that time, Arthur and Anderson would have been bigger than any of these, PwC and all of these, right? They would have been so big at that time. if they would have continued. Anyways, coming back to F8, right? That's just an overview of how audit looks like, all right, or how this activity takes place. Specific to the F8 exam, specific to the F8 exam, if I tell you the exam structure, and after that, obviously, I'll tell you how we'll go about, to cover the entire course. You have two sections, section A and section B. All right. You have two sections, section A and section B. Section A is worth 30 marks, right? So you have approximately 30 marks um, coming in from section A, right? How are these 30 marks constituted? I'll tell you in a bit, right? And then you have another 70 marks coming in from uh, section B, right? You basically have three OTQs, right? Objective test questions. That means MCQs, but based on a larger scenario. Okay, so from these three OTQs, you get five MCQs basically, five questions you can call it in each OTQ, right? And each question is basically worth 2 marks. Guys, remember you've already given papers before, right? So it's 2 or 0. There's no 1. All right, this it's 2 or 0. Okay, so this 30% of the paper, right, is where if you get this right, that means if you pass with a good margin in this section, you probably will pass with good marks in the entire paper. All right, and this is something that I have analyzed based on my past experience as well. All right, so 30% of the paper you do it well. Obviously, at this stage, you think that why focus on 30%, why not on 70%, right? It's because 70% requires a different technique, and this 30% requires a different technique. The technique that is required to cater this 30% is much more difficult as compared to the technique that requires, the technique is that is basically applicable in the 70% of the paper. All right, but and let me you know mark my words over here. Even though the approach in the 70-mark question on the 70% of the paper is easier, students tend to make more mistakes in the remaining 70% of the paper. That's my past experience. All right, students tend to make mistake in this 70% of the paper. Why? Let me tell you. You basically have in this section, right, you have three constructive response questions. All right, out of which two are worth 20 marks each, right? That makes it 40, and one is worth 30. You know where the students tend to make more mess? Sorry, just a second. Students tend to mess over here. All right, they tend to mess over here with a 30-mark scenario, right? They know there's a huge playing ground, and a lot of students manage to do this area well if they know the topic well. All right, but in the 220 marks question, they tend to mess up a lot. usually get TOCs, substantive, these type of areas in this 2 into 20. And these are tough areas. Approach is simpler as compared to the section A, but areas that the examiner tends to ask in these two questions, in fact in the last one as well, they're basically tougher areas. All right, reporting, for example, right? So I always tend to tell my students that even though I tell the even though I'm telling you the exam structure at the very beginning, you don't know the content, you don't know the standards yet, you don't know the how to go about a particular question within the audit examination, right? Even after that, I'm telling you the exam structure. That means you need to just have a look at it and forget about it. Simple. Why? Because we're gonna target 100% of the course. All right, and we're gonna target each and every approach. Whatever you're comfortable with, you can work that out in the exam. All right, there's 100%, I would say, I can say this, absolutely, by absolute surety, right, that two students sitting together cannot work with the same approach. All right, you guys cannot work with the same approach because all of you have a different mindset. Okay, so I'm gonna tell you all the tricks in the book. It depends on you. Whichever you're comfortable with, you can choose that, you can adopt that, you can work that out during your practice sessions, and you can get your marks through that. Okay, but remember one thing. Number one, if there's an advice that you've been given by your peer, someone who's at your level right now, right, don't listen to that without getting it verified by some mentor, by me, by someone who's already passed out ACCA, or some position holder at least. All right, never listen to that. Why? Because in most cases I've seen that they're wrong. Okay, yes, it's a theory based paper. It's most of it is theory, right? But does not mean that you forget about numbers, you forget about ratios, you forget about financial reporting. Why? And like I said in the very beginning, what are we auditing, guys? We're auditing the financial statements. Financial statements, just one part of the financial statements is notes. That's descriptive. Everything else, SOCI, SOFP, SOCF, SOCI, statement of changes in equity, all these statements are numerical. You just have one line item and you have a number against it. If you're not able to interpret the numbers, how will you, or how do you think you will have the capability to audit such numbers, to verify such numbers? You cannot. So you need to have that skill. Not prior to the course, we'll develop it over the period of time. For those who studied F7, you obviously would have that skill, but again, for those who haven't studied F7 yet, right, I will teach you how to analyze the figures, how to perform, which we call analytical procedures, right? But that's something that we'll discuss later on. Okay, now coming to the approach, you guys would have seen these notes over here, right? You guys will get these notes. Okay, and we'll obviously, the lecture that I give will be from the notes because these are my own notes. All right, and the lecture that I give and the notes that you will get, which will be these notes, they won't have any contradiction because, like I said, it's something that goes hand in hand, right? One thing. Second, once we're done with the topic, and this is the approach that I follow in all the papers I teach: reporting, basic, advanced, ICW, um, audit, taxation, F3, whatever it is, right? So in all the papers, this is what I follow: topic, then we complete the kit for that topic. So usually kit takes 1 or 2 classes, depending on how good you are with section A and section B questions, right? Like I said, most of the students get section A wrong and section B right, but not exactly right. because they fail to express themselves the way the examiner wants you to do it. Okay. So obviously I'll teach that during the practice. But the point is, once we're done with the topic, section A kit first, section B kit for that particular topic second, and then we move on to the second topic. All right. Second, similar to the first one, section A kit, section B kit, that is topic, section A, section B, third. All right. So this is how we're going to go about it. Um, I'm not going to start the lecture today. It was just about how we'll go about it and how to target it. The I intend to finish the course by, so today is 21st December, right? So let's, by this date, all right, 20th Feb. That's when I intend to finish the course along with kit practice. And after that, I will start a revision course. Okay. So anyone who wants to join at that time, you can. If you want to join right now, most welcome, obviously. Right. So that's about it, guys. If you have any questions, I'm available right now. You can ask me, and obviously I'll answer you one by one, please. If you have any questions.